This is Martin from Secrets, the channel for learning about trading and investing. Welcome to the markets tomorrow, the daily stock market analysis show where we look at what happened in the markets during the day and what we can learn from it and how we can plan for a better trade for the next day. Right? And this is analysis for November 11th, Friday 2022 tomorrow. So it's a Friday tomorrow, right? So what kind of day we had was a down day. It's the second down day on the indices that we are seeing, but 18K was kept intact. There is a big bull bear fight that happened today, and we are at a support now, right? So that's the action. Let's get in the details on the charts. So here we go. This is the daily charts of Nifty that you see here. It's a small body. Small body is always in this C. It's at a very good support. So there is a change in polarity, potential bounce that is possible. That is where the previous resistance acts as a support, and then bounce from here. That possibility is there. Banknifty also same possibility is there. But Banknifty seems to be more strong than Nifty. Remember, it had touched the it had closed green. That means it could recover almost all what it had lost, and it had created an all-time high earlier previous week. So it seems to be strong, but that's also at a CIP. It is a resistance, and now it's taken as a support, and then change in polarity bounce is possible here also. So basically, it is less than 1%, 0.71% lost on 29 points lost. In the Nifty and the Banknifty lost 179. That's less than 0.5%, 0.43. Basically, intraday, both of them gap down. If you look at the 15 minutes charts on Nifty, you can see that it gapped down and then it trended down, and a recovery attempt was made, and it could recover half of it. Banknifty also gapped down and made a V-shape almost full recovery. That's what you see there. That's the price action. So we talked about all the, but otherwise, if you see, you can it is still above all the moving averages and exponential moving average of 20, 50, 100, 200, everything. It's still above that. And what's interesting here is that there is a beginning of a consolidation that we can see, but it's in expansion mode. You can clearly see that the banks are aiming high. That means there is every possibility that it can move up, but there is a short-term pause for consolidation that is seen. Remember, this is inevitable. Whenever price moves too much far away from the median of the Bollinger Bands, then it obviously has to come out after some time. That's exactly what has happened. So under this this median of 20-day moving average is not breached, we are in the safe zones. Same with Banknifty also. We had moved up. So, but there is a some pause or consolidation can be seen in the very short term, is what it indicates. But how long is that short? Would it extend to a long consolidation? It may take time. By the time this band will also move up, and then some skews will happen. Right? So that is not going to that skew, but it's just a bend. Remember, we had a bend here, on November first week as well. Right? So there's another bend that may straighten out tomorrow and then break out. But the bullishness, nothing has happened, is what it is. So having closed 18K, and having closed above the 41,500, it's very positive. Right? And it is still in the borderline. We have to say that, although it is technically broken out, it is still on the borderline of making a new swing high on the Nifty. Yet we have the 18,351 and 18,600 above. All-time high is not kissed or touched by the Nifty, but Banknifty has touched it. But still, a green close has not happened. So there is no enough conviction for that breakout. Has not happened. But if this week is going to close red, then it's going to be a bull trap on both indices. The bull trap normally could extend further downside. So as of now, looks good. Probably today's expiry play that happened. There was selling pressure, that it has moved up pretty much, and very good support as well, exists on the downside. You can see that the first resistance upside would be 18,117. Above that, you have 18,296 to 18,350. That range. So 18,300, 350 would be a very good resistance that has to be taken out for the indices for the move up. Downside, this gap 18,117. If that is breached, then you have 79.66 again, previous swing low, which is acting as support, and after that you have 17.839, which could act as a support, which is also a gap. Likewise, Banknifty, which is in a better position, can be clearly seen, and the resistance would be an all-time high, 42,000 rounding number, and 41,950. That zone is going to be the major resistance. Below that you have also resistance at 41,678, that zone. No. So these are the resistance upside. Downside you have the swing low at 41,184 and then 4,819 levels. So let's see support resistance on the Banknifty, immediate support resistances, right? So we had covered almost all of the aspects, and then moving on, the Bollinger Bands we have seen momentum indicates that there is still in the bullishness, and also there is a potential unconfirmed positive reverse momentum divergence on the daily chart short term, which is unconfirmed, and if that works out, it could go up and hit the 18,300 levels once again. And so the indices, both of them are holding the RSI 60 support strongly. It is not ready to give up that. So if that had breached and 18K had gone, then it would have been a different story. As of now, that has not happened, and then we are in the safe zone. And momentum has a divergence, along with the CIP. It could be possibly, when up move from this is cannot be rolled out at all. Trend indicators are also still in the bullish zones. The crossover has not happened, but the strength of that bullishness is falling, not rising. Right? So it's a weak strength. That's why India is cooled off in spite of the market losing. The India VIX, I'm sorry, not India. India VIX is 15.56. It is cooled off 2% today. Yesterday it had spiked up 2% today. Market has gone further down, but there is a cool off in the VIX happened, contrary to what we expect to have a spike, which has not happened. Right, so that's all. So open interest data may not be that much relevant, but just referencing we are going, because we have the expiry that happened today, the new weekly expiry for the number 70 is going to start actively traded from tomorrow only. So today the futures wires had made a short build up and on the Nifty, and long unwinding was seen both in the Banknifty. Both the bearish build up that has happened. Options Y for the November 17th is showing very wide range, no clues, 18,000 and 19,000. But Banknifty clearly it's kind of a straddle. All people are betting on that 41,500, right? But nobody's yet taken risk on writing very far away, even for an expiry that is going to start only tomorrow, right? So now writing is seen at a higher level. So this people are tied to that 42 levels of uncertainty still there in the option prices also, but things will be clear only from tomorrow, so don't take this too much serious. PCR also is not bullish enough, but 0.78 and 0.84 is what you see in the Nifty and Banknifty. Today's performance, like those kind of 1%, 4.4 to 1% of fall has happened across the sector, right? Reality alone could manage to, reality sector alone could manage to close flattish. Flashes close could happen there, but otherwise all of them fell. All the major sectors like pharma, IT, auto, metal, all of them fall. But metal is the only sector that is maintaining the bullishness. That's when all other sectors are fallen sideways. That's something you have to keep in note. Right? So yeah, slight consolidation is what sideways means. Across the sector there is majority of them moving in the sideways sector, major sectors we're talking about. Heavyweights, HDFC Bank and Kotak Bank managed to close green, and both of them, it's not Kotak Bank. HDFC Kotak managed to close today's performance. Green, it's nearly 1% of move has happened in both. Reliance and IT stocks fell. That fall is 0.5% to 1.2% of fall has happened. Other sectors, but not other sectors. Other heavyweight stocks other than this HDFC, Kotak Bank, Reliance and IT, what was that? They had closed flat. HDFC Bank and Reliance are the two heavyweights which are in the bull zones. Some of them still. They are the market movers. They're still in the bull zones, which is again another optimistic thing. All other major heavyweights are still in the sideways on the short-term daily charts, as we have seen. Now the good news is that Fyers did not sell today also, in spite of the market being floating around. It managed to 36 crore of buying that happened actually. Selling has happened from the profit booking of the day as of 967 crores in the cash market. So institutions are not ready to sell. At least it's also very optimistic for the market, for the bulls to hope that the markets can move up, right? Crude oil has is showing some red, which is good. It's maintaining levels below the 85, which is very good. But there is a very likelihood that it can go up to the 90 plus, up to 100 levels. That's trend line channel top. So basically, it is hovering in that. I know there is small pullback consolidation that's there, but momentum is in sideways. Dollar index is the threat. It is once again bouncing up from the support zones and moving up sideways as of now. 110 plus 93 still multi-decade high nearby levels. USD INR currency pair is 81.66. That is also a small pullback had happened. Now it is again rising. Rupee is still in the 82 kind of levels. Is very all-time low levels, very close to that. Nothing much. It is not cooling off at all. So this is the worry. The currency is the concern that is projecting out as of now, apart from the US markets. Gold is consolidating and managed to climb back in the resistance zone from where it had fallen down, and then small up move seen. SGX is green as of now. It has also seen some green, but there is some weakness that is seen in the US markets. Dow Jones is actually falling down from the resistance zones after hitting the channel top, and there is trouble there. But it had at least moved towards the channel top. But in the case of the Nasdaq and the S&P 500, it is more weak than the Dow. It is not even climbing; it is purely consolidating the sideways move. But Dow Jones still maintains the bullishness on the very short term from the RSI point of view. But it has hit resistance. There is a good chance that it can fall back to the channel from where it had come from. But if it is managed to take out resistance of some consolidation, and the other two indices also follows, then there is hope. But so you have to keep a close watch of this. If there is going to be a big fall that is again going to come, or is it going to be consolidation, we don't have much impact. Major events seen: two long picks, Torrent Pharma and City Union Bank. Let's quickly see Torrent Pharma, why we have picked this. Torrent Pharma is a pharmaceutical stock, is having a bullish positive reverse divergence is there, which is confirmed. Some kind of up move has happened, and it is likely that it can move further. There is also a rounding pattern, and momentum and trend is also bullish. Right, City Union Bank has been doing well since a long time, and that is also having a good momentum. There is a range shift that has happened where the momentum has climbed to the bullish zones after spending some time in the sideways. This rectangular breakout, and this is a trade that has been taken only on confirmation. If there is a close, if there is a rise in the price that is happening above the previous day's candle, then we can enter with the neckline of the previous candle's low, right? So if this breakout is going to happen, then it's going to be a good positional bet as well if it breaks out rate. But it's a rectangular breakout with the good momentum and good trend in the bullish zones. That's why the pick is there. Now, after having talked so much, let's just consolidate and then try to see, wrap up and see where we are. So maybe for tomorrow remains to be mild bullish, not heavy bullish, because there is consolidation that is seen in the Bollinger Bands. Right. So markets today have done nothing but some pullback, some give back after having moved far away from the moving average, and then now it is at a good position to support zone. There is changeable already bounce possible. There is a momentum divergence, positive reverse divergence, which is bullish in nature, that can bounce up. So that together, along with the Fyers are not selling, the momentum is still good to crossover. Has not happened. The trend, 18K is held. The mix has cooled up substantially. Institutions are still buying. All of this are still in the favor of the bulls. That's why I have a mild bullish view. But US market is something that you have to watch out for. If it is able to break out that resistance, Dow is able to take out that, and the Nasdaq and others are able to rally back to channel top, then there is hope. But the dollar shooting up and 82 plus of rupee levels is a danger. Crude, as long as it maintains that level, it should be okay. The levels immediately to watch out will be downside 7,800 in Nifty and the 18,350, not 17, 18,350 on the upside, 48,000 on downside and 42,000 on the upside on the indices for the next day. So that's my view. Mild bullishness continue to be there as per the talks. Today we had some kind of consolidation is there. Whether it's going to consolidate at this point or is it going to fall back to the moving average, or is it going to take some time, move spending there, and then break out eventually? We never know that, but we have studied the market and indicators and then understood where we are, at least. Now it's based on the probabilities of resistance and support. Take positions and manage your positions, and along with the portion sizing correctly done. So if the VIX is cool, then it's good time to take, but if it is spiking again to 20, then you have to be careful. Regardless, you have to take your positions overnight with hedge positions only. All the hedge option strategies are explained in this playlist if you have not seen. Also, investment strategies using options, covered put and cash secured put, covered calls and cash secured puts, and all these strategies are also there in the video playlist if you have not seen. So that's my view. If this market study has helped you some way in framing your view for tomorrow or the next few days, and in some way or the other, and if this influenced your trade plan some way, if you learned something from this, definitely, but don't forget to subscribe, hit the like button, put in your feedback, share it with others. We have very few subscriptions. Appreciate your help in this regard. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.